Hi, it's Michael Kerr here, presenting Small Business Banter. A healthy micro and small business sector means a successful economy and a more vibrant society. Small Business Banter is about helping regional business owners better prepare for current challenges, but also for the next stage of business success. I'm Michael Kerr, founder of Kerr Capital, advisors to business owners. Each week, I interview a fellow small business owner or an expert, and they share their stories, their lived experiences, the wins and the losses, and their best advice to help you, the listener, get the most you can from your own business. Small Business Banter is brought to you from the studios of 104.7 Gippsland FM and is heard across Australia on the Community Radio Network. And thanks also to Kerr Capital, supporters of the show. Welcome into another edition of Small Business Banter Community Radio and podcast. Lachie McColl is my guest today. Firstly, a big welcome and a big thank you, Lachie, for coming in today on Small Business Banter.
Thanks, Michael. Thanks for having me.
We've known each other a fairly long time in a professional sense, and your expertise is around small business valuations and small business value, and extracting that value when you sell is a real is a centerpiece for a lot of owners. And so what we want to do today is stay away from the technical, but drill down on your deep experience doing small business valuations.
Yep, happy to help.
Yeah, and look, let's set some context for the discussion. What we're going to talk about is how and when you should use a valuation, some of the market research you've been doing, where are the gaps between value and reality, and what owners can do to make better use of a valuation, and what not to expect from a valuation, and some of the trends that you're seeing. But would you like, please, just to give us a minute or two on your professional background and the work you do?
Yeah, absolutely. So I'm a qualified accountant, and probably very early on learned that I didn't like accounting all that much. So I quickly kind of fell into this world of business valuations about 18 years ago, and I've been doing that ever since. So really pretty much full-time business valuations for a bunch of regions, which we'll talk about soon. Started off working for one of the bigger accounting firms in Melbourne, and gradually inched my way back to my hometown of Geelong, where I started our own, we'll call it a kind of an independent boutique business valuation practice about 6 years ago, and really haven't looked back since then. So jumping around, but started working with the larger organisations, even some of the big listed companies in Australia, and have gradually found myself working more and more with the small and the mid-sized businesses in Australia, and particularly locally in Victoria, because I think it's a more interesting conversation to have with someone that actually owns the business, that's paying your fee, that can look you in the eye and say, what are you talking about and why are we doing this? And we can have a real debate about it, which is far better than often working with the bigger companies where you can get lost in management layers.
OPM, other people's money.
Yep.
Yeah. Correct. So we've got this whole show is about small business owners, and getting the most they can out of their small business. And so that work is incredibly relevant. Great to hear you're excited about chatting to owners, because you can relate that to real value and it's got an impact on them. So, excuse me, we're both recently had COVID, so we're both a bit croaky. Excuse the listeners from my perspective for being that way. But can we start off to put a small business valuation into some context, what's a typical range for a value of a small business, and what are the couple of key drivers that determine that value? Again, staying away from the sort of the technical.
Yep. So what size are we talking about? I'll probably just give you some context, Michael, and you may well have already talked about this before, but if we sort of set the scene in Australia, and we do a lot of research on, what's out there for sale, to try and understand, then what drives the valuation. But the last look that we did, there was about $1.2 billion worth of small businesses for sale. And about half of those had an asking price of less than $200,000.
Yep.
So that can kind of set the scene. And maybe to spin it another way, if you look at the Bureau of Stats, their numbers, they would say there's about $1.3 million businesses in Australia, and about 60% of them have revenue or sales less than $200,000 per year.
Yeah, and I think about 80% don't employ anybody either.
Yeah, exactly. So we're talking about a lot of people are either running their own very small business, maybe a cafe or something like that, which is really giving themselves a wage.
Yep.
So they're buying a job, I think, is some of the terminology you've used before.
Yeah.
So that kind of means you've almost got, I look at the Australian market and say there's three levels to it. One is the really small businesses that I just referred to, those $200,000 and below revenue, kind of the cafe, the business owner working in it full time.
Yep.
And they're priced and valued a certain way. And then we have kind of the other end of the spectrum, big companies, big listed companies employing thousands, and they're priced a very different way. And there's, a bunch of information that you can look up in the Fin Review on the internet or anything to talk about their multiples of profit at 20 times or something ridiculous like that.
Yeah.
And then you've got everything in the middle, which is probably mostly where I work. So the below the big and above the 200,000. And we find lots of businesses sort of fall into the $1 million to $5 million range of values, to answer your question. Yeah,
yeah. So if we just break that down, because there are a lot of businesses worth a few $100,000, and that's they're very viable for the owner.
Yep.
And when they come to sell, there's a lot of confusion about how you value it, but in the main, they're returning a wage to the working owner. So so the valuation approach to them is different to the bigger ones, because do you value it on the basis of what that wage and that discretionary earnings is for the owner?
Absolutely. Yeah. And I think a lot of business brokers will play in that smaller space, and it's very much if I'm running a cafe and I might have, a couple of staff and myself running that cafe, then someone else was to take that on and buy that from me, then what kind of wage or what kind of return might they expect in kind of, all of the profits, and you can use them however you like as an owner. So it might be something simple like, well, if my wage is X, how many years or how many times X might I pay for this business? Yeah.
So, and let's not it gets confused with what's the profit after. This is where you and I are both embedded in this stuff. But for someone listening in, the simple way to think about this is that if your business is basically paying you a wage and it's a viable business and it keeps paying you a wage, the way you're going to value that is some kind of multiple, which is 1, 2, 3, whatever it might be, times that wage. Because with that wage goes, it is a business that you have some control over, and this is why it's not. People will pay different amounts because they want freedom or they want the ability to grow a business. So I think I think we've established that those micro businesses are going to be valued at some multiple of the earnings or the wage the owner pulls out of it.
Completely agree with that, Michael. Yep.
And if we go to the next level, which is the belly of the small business market, I think you said, let's call it up from a few $100,000 to maybe up to $5 million.
Yep.
As I understand it, we move from a multiple of what the owner earns out of it to a multiple of what the profit of the business is, because it's bigger than just the owner. So the owner can pay themselves, and ideally they're earning a profit over and above their wage. Is that kind of a good start place?
Yeah, and probably another way to think about it, without getting into the jargon, may well be, well, if I work in my business and I'm, the key person, I'm managing it, if you like, but let's pretend that you own my business. You're going to have to pay me a wage for doing my job. But as an owner, you will expect some sort of return, hopefully, for running that business. So as the owner, what kind of return do you expect after paying all the staff for doing their job?
And yourself, yeah.
Yeah, and if it happens that you're the owner and the manager,
yeah,
well, let's pretend that you're paying yourself properly, because fundamentally one day, if you want to actually exit the business or sell the business, you may need to think that way and say, well, if a buyer is thinking that way, then I need to almost pretend that I'm paying myself that wage or someone like me.
Yeah, and that's a good way to explain it, Lachie. And in all of the work I do, that when you come, the other possible and probable disconnect is between what the financials show, the tax returns show the business is making, and pretty much I haven't seen a lot of business financials where the bottom line is actually the bottom line. There's part of the reason you're in business is you've got discretion on how you manage your tax, fundamentally.
Yeah, well, you're being very diplomatic, Michael, I think. I don't think Jim Chalmers will be listening, but you're right that we do have an amazing degree of flexibility in our not only our tax system in Australia, but as a business owner, you've got a bit more flexibility in how you pay yourself. So it's not necessarily a PAYG wage,
yep,
where you're paying withholding tax. It may well be that you're making distributions to a family trust, but ignoring the semantics of that, as a working owner, you should be paid something for your effort.
Yep. And so the fear or the uncertainty that comes when you've time to think about getting a valuation for whatever reason, just for comfort owners, it's okay. Nearly all financial statements don't reflect what we might consider the true bottom line to be used in a valuation that you might do. So there's that period of adjustment.
Another way to put it, Michael, might be that if we were to go through a valuation process or an appraisal with a broker, for example, they'll go through what we call a cleansing of your numbers and say, well, okay, here are the numbers that we see, and this is what you report to the tax office. But let's do a cleansing process and say, well, what would this look like if you didn't invest in that new software platform? Or what would this look like if you actually paid yourself a true estimate of your wage?
Yeah. And
any other kind of lumps and bumps. Let's kind of cleanse the numbers and see what it might look like through the eyes of a potential buyer.
Yeah. Or just a standalone investor. What would be left if you ran the business properly and paid everything, at the right time and on the right basis?
Yeah.
On today's edition of Small Business Banter, chatting with Lachie McColl, and we're chatting about valuation. Lachie, that's kind of set it up. So I don't want to forget to come back to your research, because I'm intrigued about that. But just if we could round out with a couple of things here. What's the typical for those businesses we referred to above a few $100,000 up to 5 million?
Yep.
And if you're an owner, you'll hear the term multiple a lot. What are guideline multiples of the profit that a small business owner could start to think about?
When I'm thinking multiples, just to sort of give some clarity, I'm talking about pre-tax and pre-interest multiples. So, I know you want to stay away from the jargon, but just set that scene that there are different layers of multiples.
Yep.
But if we talk about that, broad concept, normally we find around the 1 times to 5 times profit, that is.
Yep.
So big range, but there's a reason for that big range. One, to the industry that you're working in. So it may well be that it's an attractive industry to a buyer because, there are others that are buying your kind of business, or it's an easy to run business, or there's opportunity to grow, or whatever it might be.
Yep.
And the 1 times might be more of the smaller end. So you're kind of quasi buying a job, or it's a rather simplistic business that doesn't command a kind of a higher multiple.
Yeah. I mean, so this is, I completely agree that I always talk about a potential range of 1 times to 5 times. And so you can see there's a massive divergence in potential valuation of the business. So that's a good kind of segue into why it's important to understand value of your business today if you were to sell tomorrow, not because necessarily you want to sell tomorrow, but because whilst you're running the business, you enjoy the returns out of the business and the flexibility, freedom, whatever else but you've also got the opportunity to shape the valuation in that range from 1 times to 5 times.
Yep, absolutely. Yep.
And so can you talk about the rationale for doing a valuation, what's involved, and when an owner who's got an eye to maximising sale value, when they should think about doing it?
Yeah, so I'll probably put the work that we do into 2 categories. There's either the reactive need for evaluation, so something has happened in your business or your life that's causing you to be either forced to get a valuation or told to get a valuation, and that'll be things like you're going through a dispute with a business partner, you're getting divorced, you're losing interest in your business, so disinterest, if you like, the 3 Ds.
Yep.
So that's kind of the reactive reason for getting a valuation, and it's sometimes you just have to do it. The other is more the proactive stuff, which is probably the more interesting side of things, saying, well, I'm thinking about my future, I'm thinking about maybe exiting, I'm thinking about maybe handing my business over to my children. I might want to offer some equity to staff. So what is my business worth now? So I can start thinking about how I go about that. So I can start forward planning for either what does that look like, or how do I plan to exit in 2 or 3 or 4 years' time? If that's an outright sale, how do I maximise it in 2 or 3 or 4 years' time?
Yeah.
So that's sort of the context, and I think the other part of your question was, what's the process?
Yes, indeed. Mm.
So I'll probably, again, process is really simple in my mind. It's twofold. One is, what do the numbers say? I'll call it the quantitative side of things. How has your business been performing in the last couple of years, and where is it heading to? And again, we go through that cleansing process we talked about before.
Yeah. So it's a line by line review of possibly 3, 4, 5 years worth of financial records to cleanse, as in your words, and then to settle on something like an adjusted profit. And,
correct.
So is that I always think about it in terms of if you think your business is worth or could be worth $1 million or a few $1 million, the cost of getting a valuation, it's a real. I see it as an investment in getting a better outcome later. So are we talking about thousands of dollars and weeks of work? What's kind of a
Yeah, potentially. I mean, our valuations can range in the thousands, you're right. We're not talking 100,000, but probably the good context that you're trying to paint, I think, is that I do a parallel with the financial planning industry and say, well, if we own a superannuation fund, which we all do, even if it's a self-managed super fund, you'll have a portfolio of investments, and let's pretend that's worth $1 million for argument's sake, you'll be paying someone, if not doing it yourself, you'll be paying probably a super fund expert to look after that money, and you'll pay them a fee, and it might be, up to say 1% of the value of your portfolio. So you might be paying your super expert, if you like, 10 grand a year to make sure that $1 million grows every year. So if you draw the parallel to your business, if your business is worth $1 million, why should we not be spending up to $10,000, not necessarily on a valuation, but making sure that we can grow the value of the business? And we can only grow the value of the business if we know what it is to start with.
Yeah, there's a baseline that I think is really relevant, and that's if you had to sell tomorrow. And it's not easy selling tomorrow, but you could paint a picture of, this is likely what would happen, this is likely what you would get, this is likely how long it would take.
Yep.
Yeah, and as we discussed earlier, the range of multiples from 1 times to 5 times just shows you, or demonstrates how it can vary so much, and why you need to invest in moving from whatever it might be up. If you can move it by a multiple of a half or 1, and your profits are a couple of $100,000 a year,
yeah,
you can add hundreds of thousands to value of the business.
Well, or potentially, but occasionally we'll see clients that have a business and they've never really thought about what it's worth, and secondly, how can they actually extract something from that? How can they convert that into money? And sometimes we'll actually have almost a healthy debate or a heated debate with a client saying, well, my business is worth $1 million, and we might say, well, no, it's not. You've never made a profit in the last 5 years. It can't be worth $1 million. And so it's sometimes a bit of a reality check.
Yeah.
On the negative sometimes, hopefully on the positive. It's not always about saying, well, you're $1 million now, how do you get to 1.5?
Yeah. Yep.
Sometimes it's about saying, well, you've got a real gap in your expectation of now to retirement, so what are you going to do about it?
Yeah. We all need to understand those things. Lachie, so where you get your valuation from is obviously important, and there's a lot of information, misinformation, misguided information out there. Do you want to just talk about the analysis and research you've done on the small business for sale market in the last few minutes?
Yeah, sure. We're trying to, I suppose, make sure that there's transparency of information when it comes to not only just our valuations, but anyone that wants to work out what their business is worth. So we've kind of got that information in Australia in the property market.
Yeah.
So we can jump on the website and we can look at all of the properties that have sold in our street or our suburb and kind of work it out, or get someone to do a valuation for us. We don't have that luxury in the business world, at least in Australia. We've got some information. So some business brokers have that information. There's some information at the kind of the top end of town, the big companies that are buying.
Yep.
And then there's this kind of big gap. So we're trying to do some homework to find enough evidence to support this whole process. So we've been going on a bit of a process for the last 4 years to accumulate data in order to support our kind of multiple conversation of, is it 1, 2, 3, 4, 5, and how do we actually substantiate that with some hard evidence?
Yeah. So you what's the research or the report called, Lachie?
Oh, look, it's not live yet.
Oh,
so
yeah,
it's
okay.
not public. It's just something that we're kind of doing behind the scenes and gradually working with.
Yeah, and I've been privy to some of that, but it is, I wish you well because it's important that there is a lack of quality data. There's a lot of information. You can go and scour the internet and find out what people are asking for the business.
Sure.
And that's just, can be completely made up. And
yeah, we do look at that as well. We do look at the listings, and that might be some of the documents you're talking about. That's useful to kind of get a gauge, like looking at any business indicator information, whether it be inflation or unemployment, we kind of look at that to say, well, what's selling in what state, are prices going up or down, and how does that then influence our decision about value of this particular business?
Yeah, so some really important trends and in what's going on overall across the country.
Yeah, absolutely. And it's interesting, particularly during COVID, to see, which states were peaking in terms of businesses, people trying to exit, what was happening to prices, were there particular industries that were more prevalent to be sold, things like that.
Yeah. I think that the real takeaway, or not one of the takeaways, is that don't compare the process when you're looking to sell your business with selling a house. There's a lot more. There's so much data available, very precise data on property values. Sale of businesses is at the other end of the spectrum, really complex. So you need that sound professional advice, and you need it early. So, Lachie, thank you so much for your time today. We've only got a little bit left. Do you want to just, if people were to want to talk to you, where do they catch you?
Jump on the website, smevaluations.com.au. That's the new website. Otherwise, I'm sure we can share details if need be, but probably the website's a good starting point.
It's a very self-explanatory URL or website name, SME Valuations. Yeah, good.
Brand new.
Thanks so much for your time today, Lachie. Really enjoy it. Very insightful, and I hope we can do it again sometime.
Good on you, Michael. Appreciate it.
So that is all for today's episode of Small Business Banter. I continue to be inspired, bringing you small business experts and other small business owners and hearing their stories. If you want to listen to any past episode, jump onto your podcast platform of choice and search Small Business Banter. There you will find a diverse and fascinating collection of small business owners and experts openly discussing and sharing their experiences. For any of the links, resources, or information we've talked about on the show today, or to contact me, please head over to smallbusinessbanter.com, or you can find us on Facebook and Instagram. And it would be great to have you tune in the same time next week for another episode of Small Business Banter.